Hi and welcome to the Market Alert for Tuesday, the 9th of December 2025. So the start of the headlines: hawkish lean sparks cross-market pain, dollar gains, global bond slump, dollar and VIX jump. Well, the narrative changed very quickly yesterday, didn't it? Looks like they want the market slightly lower before the release of tomorrow evening's FOMC meeting minutes and the potential for a cut in interest rate of 25 basis points, to then have something to ramp the markets up against a very strange headline indeed. US stocks began the week mostly lower amid cautiousness ahead of key events, but with downside cushioned as the US allows Nvidia to sell H200 chips to China. I'm sure China have got their own chips, to be honest with you. I think you'll find China's probably bought a few off the Amazon or whatever and taken them apart, backward engineered them, and know exactly what they've got. So again, that's for me misinformation. They certainly don't need the US Nvidia chips to continue the development of their own AI, because that came out last year, didn't it? That they'd done it on about 4 million quid as opposed to 4 billion plus. Anyway, Treasuries and JPY weighed on Japanese earthquake while tech outperforms again. The tech sector moving higher, obviously based on that news from Nvidia as well, or the US government allowing the Nvidia marketplace in China. And economic news today, what have we got? We've got, it says ADP weekly employment. Is that right? It's just refresh. This is tentative. This is the US, but we had this last week. How weird. Anyway, we've got JOLTS job openings as well, so that's on the cards. We haven't got non-farm payrolls this week, have we, by any chance? Let's have a look. Unemployment claims, that's Thursday, nothing for Friday, because non-farm payrolls are a Friday, so nothing there for that. So we'll just have to wait and see. It's like I say, since the government shutdown, the whole thing is out of sync. But not to worry. Right, let's have a look at the markets for yesterday and kick off with the Dow. So look at this weakness that's purported to have come in just before we have the potential interest rate cut tomorrow evening. So in the Dow, down yesterday, we stopped at the 89% retracement, which recovered yesterday in the alert. So the market down below the 5-bar moving average and also down on the overnight there at the moment. Let's have a look at yesterday. Considering Nvidia was given the green light, interesting to see that the market did actually sell off, and overnight this doesn't help matters either, because it's complete and utter nonsense, as I mentioned earlier, and the reasons I mentioned earlier. So the Dow is sideways at the moment, needs to get back above the DP and certainly above the 200 MA, the 50 EMA. I've got the DP and the close there as well that needs to be taken out to the upside. In the German DAX, it fared better. We've got an inside bar for yesterday below the high of Friday, and obviously higher than the low of Friday, but stuck at that 78% retracement, but holding a lot better and firmer than the Dow yesterday. So have a look at this in a bit more detail. We managed a move to the upside, and then we came back to where we started. We didn't take out the low of the morning, and the market then sideways too high there at the DP, sitting just above that at the moment. So a bit stronger there than the Dow, but not an awful lot. Let's have a look at the S&P. So in the S&P, similar picture to the Dow. We've come back below the 89% retracement. The market's down overnight, and yesterday's market action took out the low of Friday. In a bit more detail, you can see same thing there. We've got that sell-off there all the way to the close. Then you see some short covering coming into the market, but at the moment, again, displaying that potential weakness that we've seen in the Dow, with the market below the 200 MA and the 50 EMA there as well. In the UK, still slightly lower there. Needs to hold at the 50 EMA, and unless you're short, then you want that to be taken out and see the market move lower. If we go to the low, to the high, you'll see that we've got to get through that 38 and 50 there as well, which ties in with the 50 EMA. 30-minute charts, again, you can see everything was fine until the Dow and then the market sold off. And like the Dow and S&P overnight, at the moment the FT100 is below the 50 EMA, slightly just below the 20 as well, and below the 5 as well, which is the magenta coloured average line there as well. So have a look at the news about the US dollar spiking to the upside. So it did. You can see that there. It bounced a little, but it's stuck in a sideways range. Once the rates have been cut, that's bad news for the US dollar. Unlikely to see prices move further to the downside, to the sort of areas over here and here. But until that happens, we don't know. But they're holding the market at the moment, as can be seen there. Again, if we were to just move this down, this is going to be an area of support just there to begin with. That will be the first sort of area of support if the market holds at that level. We'll just have to wait and see. What is that price level? It's 98.58. Right, let's have a quick look at the metals, which are under pressure as I'm recording. So in silver, the market sideways yesterday, another inside bar, very quiet, but we've just had a bit of a sell in the 30-minute chart. They can't help themselves, can they? I mean, look at the LBMA at lunchtime. We saw this yesterday as well, in the pre-market. Same thing again, just trying to bring the prices lower. We need to stay above 58, which is the red line there, really. And we need to get back above all of these averages as well to the upside to try and get back to 58.50 during today. Obviously, optimism for the rate cut will support the market if it does come to fruition tomorrow evening. Meanwhile, gold's struggling, as you can see there. Its time will come between mid-December, which we're not far off, to February is the seasonal rise and pattern for gold. And there you can see hitting yesterday's low. Got some selling there, but the selling seems to have disappeared at the moment, back down to the low of yesterday. But let's just spike it below it, then we can buy a little bit cheaper than we could have done yesterday. And that's the metals. So let's have a look at the gold silver ratio. So in the gold silver ratio, very quiet for yesterday. You can see we're stuck with this support, aren't we, at the moment? We're building a bit of a sideways channel. Hopefully it will break to the downside. We'll have a lot faster acceleration in the price of silver compared to gold, which will support the gold silver ratio in its current downtrend there, sending prices further to the downside there as well. Right, just before we close, let's have a quick look through yesterday's trades in the German DAX 2-minute. So in the pre-market, we were sideways, and just as a warning for today as well, expect a repetition of what we saw yesterday when the market's waiting for a decision, a big decision with regards to the Fed. Then the markets can become very choppy and unkind, I think is the best way to put it. So yesterday morning we started off to the downside. That's been the pattern for several weeks now, but you see the buying coming in with the green bars there, moving prices back to the upside and then back, and we start to take on this sideways pattern in just a moment. So we've been up and down as it is already in a narrow range, with just the market hitting the scalps and the buying coming back in to support the market. However, it now becomes very choppy, as you'll see in a moment. So the market trading down to that 200 MA there, a black line just tucked in there, and then prices finding support. So there's a first loss, and then we get a second one as the market becomes narrower. We're looking at a 25-point range through here, so it needs a lot more volatility than that. And then the market moves to the upside and manages to break out, recouping some of those losses. We then head into the morning session, mid-morning session, and then the Dow futures coming on stream, and then into the US in the afternoon. We had a potential short that was stopped out before it was filled, and then we had a successful trade to the downside there, followed by a second one down to the 200 MA, and then you see the buying come back in there as well. Market holding sideways temporarily, because once we close back through, all we have to do is take out the support to the left, which we see, and then prices moving down to the close. It's just a shame we didn't get the signal at this level. So the market continues down to the DP, and then into the evening we just see the market stuck in the sideways range, just drifting up and down. Overnight prices are currently, let's have a look, see what we've got, very choppy and sideways, which you can see there. Let's just squeeze the chart up, see if we're anywhere near yesterday's low. We're off that at the moment, which is useful, and we're just trading above the 200 MA as well. We need to get back above the DP, but I suspect we're likely to see another test to the downside first, given the weakness overnight in the US futures at the moment. Right, that's it for this one. Let's see what happens today. Like I say, just be warned, could be a choppy sideways day once more as the market awaits the news for tomorrow night. And with that, have a great day, and as ever, thanks for watching. See you in the next one.